Good morning, everyone, and welcome to the weekend update here on March 16th with Steve Gans as we take a look at the market action over the past week, as it was a pretty volatile market here last week. So we had some fairly significant drops as we continued in this particular down move right here. And that accelerated as we went through the week. It continued to get a little bit worse. Our volume was pretty high here earlier on. The volume did start to taper off going into Thursday. We had a little bit lower volume on Thursday here, as we can see right down in this area here. And then on Friday, we did get a sizable bounce, and I do use AI to look at market trends, things like that. I went out and I queried AI, which I will do sometimes about market action, and I asked it, on Fridays after sell-offs, what tends to happen? And there is a tendency to have some bounces. Now, I wasn't expecting this big of a bounce that we got right there, but I was expecting a bit of a bounce. Now, why does that happen? I think the most common reason that happens, particularly when you have a big down move, is short covering. All the people that are short positions in the market, they're writing those down. They don't really want to carry those through the weekend. They can go ahead and lock in some significant short profits, so they go and they start to cover. Then when some of them start to cover, things start to rally. Then when things start to rally, other short people take a look and say, ooh, man, my shorts are getting hit. I need to cover too. And it perpetuates a little bit of a cycle, if you will. Now, the key here is that I had called out last week that if we continued to break down, that this support and resistance line right there might be a potential line in the sand, and it was. So that is where we finally ended up bouncing. Now we broke the 200-day moving average here a week or so ago. That's not a good thing. We rallied back, but look where we rallied to. We just rallied back. We didn't break the highs that we had earlier in the week. Now those highs were on days that we sold off, but we didn't get above those. So to me, that's still a bit of a red flag. It doesn't look like we're, at least right now, it doesn't look like we're going to rally up a lot higher. In fact, my expectation is that we might end up actually moving back down a little bit, possibly to this low. If we double checked that prior low and then bounced off there, I'd feel a little better about it. But right now, my expectation is possibly coming a little lower, chopping sideways, and then maybe a little lower yet. I think that's probably a little bit higher probability scenario right at this moment. Now, time will tell. We'll have to see how that pans out. Let's come in and take a look here at the SPY is going to be the same as SPX. So we already evaluated that. Let's look at VIX now, and let's take a look at VIX. So VIX did hit this early high where it came up and it pretty much just peaked off of that high right there, hit the same high point or very close to the same high point. And then it did fall off. So that is a little bit of a good positive sign that maybe the carnage is over. Again, I'm not sure I'm buying that. Want to take a look at the Qs. So Qs, very similar story here. The Qs in my mind actually broke a little bit deeper than what I was expecting. I was expecting the Qs to probably stall out around in that area. Again, they did break a little bit deeper, and there's a case to be made that there could be a trend line right along in that area, working off that low, this high, etc. So that's a possibility. But again, I feel about the Qs the way I feel about the SPY itself. We didn't come back here and get over the highs of earlier in the week. So that kind of leads me to believe that maybe a little more down in the Qs. And then we'll take a look at the IWM, which equates, of course, to the Russell. The Russell kind of really took it hard. It really got slammed in this whole thing. And it is now down, approaching broke that low there, is about right on it. It's definitely looking a little bit weaker. Its down moves had significant volume associated with them. And then let's look at the RVX. I didn't look at the QQQ volatility, but it's going to be very similar. All of these are going to pretty much play the same way right now in these big sell-offs. Again, the Russell volatility has pulled back some amount, but again, still that's still a fairly high reading, which is making me think that we're still looking at some more potential downside here. Again, we'll see how early week plays out. There's some Fed announcement, I think, coming up on Tuesday. And I say announcement, they're basically going to talk about their meeting that they had a month ago, but that's the way the Fed stuff goes. They have made their decision a month ago, but it's all of a sudden going to rattle the market this week for some reason. But anyhow, there's a few things coming out, a few other reports coming out this week that I think are going to be important. And of course, anything that comes out from a standpoint of the government and our leaders is also going to probably have some impact here as well. So we'll have to see how all of that plays out. Now, those of you that are part of the alert service, let's come in and take a look at current positions. Okay, so obviously it was challenging last week as the market sold off really hard and we're trying to manage different butterfly positions, things like that. The one that hurt was one that had been a calendar. That's this trade right here. I had calendarized it. And then we were just selling out of the bottom of that calendar, and we were looking like that downside could potentially accelerate. So I did end up Friday midday. I could have let the calendar ride and not adjusted it. If I had done that, I may be in a little better shape than I'm in here right now. I may have gotten to a point of a minimal loss, maybe even a little gain where I could have potentially closed that. I did make this adjustment about 2 hours after the open when the market was rallying. The market was up about 0.75% at that point, and it was looking like it might start to roll back over again. So I viewed that as a time to go ahead and make that adjustment. That adjustment rolled this out some additional time. So I now have, I believe this expires on the 28th, if I remember right at this point. So this now rolls out to 328. That's going to give me a little more time where I can hopefully see some decay start to come in here. And it's just a little bit, I would say, safer position than the prior calendar that had a little more risk here to the downside. I did get a little whipsawed in that. Again, had I waited till the end of the day, had I known the market was going to rally 1.5% or something, obviously I could have maybe done a little better on that. But you just don't know, particularly in this weak volatile market. This trade continues doing very well. I like the fact that it's up nicely, about 15%. And we'll see what the markets bring this week, but I like the way this is set up. The T0 line is pretty nice and flat in that. So our markets can move either direction a fair amount without a significant impact on that trade. I also like the fact that this is out all the way in mid-May. So there's a lot of decay that can happen yet on this, so long as our markets don't get too exceedingly wild in one direction or another. Again, 100 points up or down isn't going to really impact this trade. You start getting outside of that, and it's going to have some minimal impact that I'll need to adjust for. Then this trade right here, looking good as well. Got a great entry on that butterfly when it was started. That's what helps this trade continue to be as effective as it has been. Got a nice wide range on this. It has been converted, of course, into a condor. The risk has been greatly reduced in the trade at this point. These trades start off with about 2,500 in risk. That's been reduced down to 750. I may, in fact, consider rolling these legs up even a little bit further if the market stays chopping in this range later this week, further reducing the risk. It's also conceivable, I mean, it's hitting that 10% area midweek or so. If our markets stay in this range, that should be at 12, maybe 15%. I'm not sure, I might not pull it off too, depending on how the market is looking at that time. Our lucid leaps, of course, these are 2 years out. Not overly concerned about those at this point. SQ continues to be a challenge. Again, it had been doing well. Then all of a sudden there were some announcements about some potential financial misconduct, if you will, back in 2023. And I've been following that news. It hasn't gotten worse, the news hasn't. And the stock has largely stabilized where it's at right now. This has another almost 2 years left on it. I'm wanting to get some indication as to how realistic these concerns are. If something comes out and these concerns aren't very realistic, I suspect it could start to rally or bounce fairly quickly. If the news comes out that they are real, I think that's already baked in. I'm not seeing a lot of additional downside yet in that. Again, that I'm continuing to watch that. That doesn't mean that I won't pull the plug. There wasn't really time to even take a stop on this because the gap down all happened within basically one day and a half, something along those lines. And then FTNT. So this is the wheel strategy. I've been selling puts in this and waiting for the stock to get put to me. I did roll this out in time, and I rolled those puts down a little bit last week. This had been up to almost 4 grand, and I do want to own this stock at some point, but right now I'm a little bit leery, which is why I rolled these out in time. This has 32 days left on it, and we'll have to see where the market goes. At the end of the day, I am okay getting put this stock if I get it put to me at around 95. I've sold the current puts at 100. So that means that I'm essentially $5 behind, if you will, when I get that assigned to me. But I've sold puts so often on this that I'm about $15 ahead on all the premium that I've taken in. So my cost basis, if I do get assigned, is still going to be quite low. It'll be roughly $15 below that $100. So my cost basis is going to show up at about 85. So if I get assigned, so long as I'm above that 85 range, that's still a win. And then I'll start selling calls against that position. Again, just normal part of the wheel strategy. That wraps up the current positions. If we do get additional downside movement, I did attempt to open a new butterfly for June on, I believe it was Thursday, and we didn't quite get enough downside acceleration on Thursday to have that fill. But I am going to continue to look for a June butterfly position. Right now, I really like sticking with the butterflies because, as you can see, for the most part, they're the most manageable. And when volatility gets higher, a butterfly is an excellent trade because of the reward to risk ratio you can get in them as volatility is higher. That's it for this week, everyone. Those of you that are part of the community, I will see you in there during the week. Those of you that might be seeing this elsewhere, if you have an interest in being a part of the community, I'll put a link down below so that you can check it out. It is where I share trades that I am making, live trades. I share a little video about the trade, why I'm doing the trade I'm doing. And then I also, when I adjust a trade, which is key in options, is you have to understand how to adjust these trades. And then when I go to adjust those trades, I do another video that explains how and why I'm adjusting them the way I'm adjusting them. And then finally, when I go to close the trade, I share that as well. And then there's also an entire library of well over 100 or so expired or closed trades that people can go back and they can literally play through those videos that I did in real time at the time I made the adjustments. There is winners, there is losers. You can see it all in there. So, and that's available as well to people that are part of the membership, all for well under $100. So take care, everyone. We'll talk to you later. Bye.